Hello everyone, Jared White here at Compass Capital Management, and now it's time for our regular monthly market update. So I wanted to start this update off by giving you a little bit of a recap of the first quarter of 2023. We all remember 2022, we all wish we could forget it. It was a year that it didn't matter if you were conservative, it didn't matter if you were aggressive, stocks, bonds across the board were down. So far in 2023, we've seen a little bit of a relief rally. Let me explain to you what that means. So in the first quarter, we saw the Dow Jones Industrial Average up 1% for the quarter, still down 9% from its high. We saw the S&P 500 up 7% for the quarter, still down 14% from its high. We saw the Nasdaq up 16% for the quarter and still down 25% from its high. So what does this say? It basically says that we are starting to be able to go into the right direction, but we are still not out of all of the turmoil that we experienced from last year. So this is a good thing, and so far in April, we've seen more of the same. Stocks have continued to rally, bonds have continued to do well, gold is now dancing around an all-time high itself. With that being said, there is some reason to be cautious. Right now, we are seeing equity valuations expand, and they are starting to look more expensive than where we believe they should be. A lot of this has to do with this notion that the Federal Reserve is going to slow down their interest rate increase policy to combat inflation. Why? Because inflation has been coming down. We saw inflation rates up at 9% in August of 2022. They're down to 5% now. That sounds great on its surface. However, the Federal Reserve has said it wants a 2% target, and it hasn't wavered. Even though the market keeps thinking it's going to change its mind, so far they've stayed pretty on course. So when we take a look at that and people are starting to push their money more into stocks, it does make us say, hey, we should slow down a little bit because the Federal Reserve is still on the path that they've been on since the end of 2021. With all that being said, we're not telling anybody to change their strategy. We are not saying we should be getting out of the market right now, but we are making people aware that there could be some volatility to come unless we walk into a situation where the Fed does pivot significantly. You'll remember from last month's call, I spent some time talking about a budding banking crisis where there were a handful of banks here in the United States that were having trouble getting their depositors their money on a timely fashion, and how there was a little bit of a fear that this could cause some sort of contagion where there would be a run on the banks where your neighbor would go to your local community bank, ask for your money at the same time, and then they would have to close up shop. Well, ultimately, that looks like that fear has subsided quite a bit. The federal government has come in and backstopped these banks. They have made depositors whole, and so far we haven't seen that be an issue. That doesn't mean that there's not going to be some other banking issue coming down the pike. It just means that the confidence in our banking sector still remains high, and that it looks like, as of right now, the federal government will be there to make depositors whole, which should give us some confidence that that's not going to come into a major issue down the road for the entire banking sector. I hope that was helpful. As always, please do not hesitate to reach out if you have any questions, or if there are any topics you'd like me to talk about on the next market update. Please like, follow, share us with your friends and family on social media. And in the meantime, have a great rest of your April. I'll see you next month.